So I actually picked this topic because it's just getting a little fashionable. People kind of hear that term, fractional CFO. What does that mean? Means just give you a fractional of their brain and, fractional of what? So I think it is a good time to really dive into that concept and understand where that come from, and also kind of use that and in your business development. And why are you not thinking of deploying a fractional CFO for yourself so you can grow out out of what you know? A lot of times when business start to take off, and of course it's a joyride for the business owners and for the shareholders and members of LLC. However, whatever you are experiencing will come to an end if there is no continuing development. If you just sit there enjoying the success, you would not have it for long. So I always tell my, clients that in business, there's no such a thing about, oh yeah, I will just be this way forever. I'm not expanding. I'm not shrinking. I stay the way it is. It never happened. If you decided to stay plateau, that just means that you decided to fold. That it's just going to happen that way. So today, and we of course don't want you to fold, and we want you to grow, to scale, to become 7 number business to 8, 9, and it just be big, right? We want you to be successful. So let's talk about this concept of fractional CEO. And of course, no responsibility disclaimer because this is a free webinar for you. And now let's talk about what is fractional CFO. A fractional CFO offers chief financial officer consulting services to business on less than a full-time basis. Less than the full-time basis means the time is less, the money is less, but doesn't mean the brain will be less. Because people cannot really fractional their brains unless they really have they had a stroke maybe, but otherwise they give you everything they have. They are also known by some other names like a part-time CFO, virtual CFO, outsource CFO, and a project CFO. Those are also names. The CFO role. So now we talk about fractional CFO. You really need to understand what CFO roles is. CFO is not someone that needed to be a CEO or the owner. CFO is actually a person, and in my way of defining them, they are the people in the trench of business, understand numbers and using numbers to manipulate decisions in a positive way. Okay, I use that strong word because I want you to remember. And the CFOs are the number people, but rising above the number, can see through the number and are making business decision for you. So the CFO roles are involving sophisticated analysis. So, a simple example I give you is when you look at a profit and loss statement, and what do you see? You see sales, and you see cost of goods sold, and then you see net profit. But what is a CFO see? CFO don't see anything on one financial statement. The CFO will ask you, can you bring me 3 years that financial statement I'd like to see? So CFO is having this holistic demand. They must know the organization, not by 1 year, but by a period of time, but not by just sales, but by all the elements of the statements. So CFO will look at your cost of goods sold and look at the fluctuations from the year 1 to year 3. And the question to you would be, the question to the bookkeepers or accountant or CPAs would be that, tell me why. So that is your CFO. And the CFO is the one that look at the history for the future manipulation. But what is your normal CPAs and your tax preparers and your bookkeepers? What do? They look at the histories only. they finish your taxes. And we're, you know that we're doing our 2020 taxes in year 2021. What the heck? It's already 6 months past. We're still doing the history. And what about your accountant? They're summarizing your last month's financial statement. It's your history. So everything the bookkeepers, the accountants are doing, it is about the history. But your CFO, it is someone that who look at your history and projecting the future in certain format. That format, you cannot Google that on the internet. That format is the experience of that person. And for example, if you're running a manufacturer, and you probably would have a significant issue with your inventory, how you account inventory. Without experience, and how would a CFO know that your type of industry, the inventory should be treated in different way, right? So there is a lot of demand on the experience. That's why a lot of times you can see math professor who are 7 years old. Oh, there is a youngest professor in the world who is only 7 years old as a math professor, physics professor. But you don't see a CFO who is 7 years old because it's impossible. All right. So now CFO is also the right-hand person for the CEO and the owner. And they are the relationship builder for your business if you have a CFO. They are the one talking to the banks to get your loan. They're the one talking to your other partners and to make sure that all the partners are working together. So they are the communicator. They're the one keeping your team members at the best stage, and they are the one really moving the dollars, whether it's moving the dollar out or moving dollar in, but they are the tool for the dollars. So you will say that, why would you want to have one? I did my business all these years, Ying. I'm already running $1 million business. I never even ever thought of I need a CFO. I don't need one. And are you sure I need one? And here I say that why you should have one. Because in business, and I know the business world is very different from where our parents is coming from to today. And do you agree with me that so much has changed from our parents' time? In the 40s, 50s, a business takes a generation to come through. But in today's world, the millionaires is born every day because of the technology, because of how fast we're moving. So when you are in business, like earlier I said that it's impossible for you to stay in one place forever. You go, wow, my month of May was so great. I made a lot of profit. I'm just going to do the same thing, exactly the same, so I'll make a lot of money. And that doesn't even exist. And that may be a month that you will take off, making more and more every month, or that may be a month of fluke and you just make that month forever. You're going to be missing that month because you will not make the same profit like before. Your CFO comes right at this moment when you experience up and downs, and when you are not certain where you are moving to. You already made money, but you also know that you are stretching so thin, you can't think straight. And every time you make a decision, you go, whoa, I see that person. I really want to hire that person. And that person wants $65,000 a year. Can I afford that person? That's a CFO question. That is a CFO who will look at your productivity of each your employee and calculating the average, and knowing that $65,000 payroll would have to create how much of sales in order you to make it. The CFO will translate that question back to you, say, hey, owner, you think you can generate $120,000 more sales with this one person come on board? And you may know that. You may know that because you're a frontline runner for the sales. So you say, oh yeah, I increased that almost for the last 2 months. I've been getting that much more, Yes, I think so. I think I will make it. That is your answer already. So you should hire that person. The CFO is the one that making this unclear financial machine, taking one part out, show you, and then you make a decision. So that's the CFO. And the CFO, because of the experience they have, and they would be able to reference what they had from the past to you. So with experience and with the understanding of the financial statement, the numbers, the CFO would be someone that you for sure need. Then you might say that, Ying, I don't know. I agree with what you said, but I already have accountant, internal accountant, and I already have a CPA firm who does my taxes, and I already have I even had an overseas accountant does simple bookkeeping supporting my internal accountant. So I have all these functions already out there. That says perfectly you need one that can string all of these together. Your CFO need to know where your tax goes. So sure, the tax preparer will file your taxes, but your CFO will know which tax structure to use, what to change, what election to make, what tax credit to apply, and will do all of these things for you. That is a CFO function. And then you can say that, oh, okay, maybe I do need a CFO, and making sure that I have this holistic view of my business, know where I go, but I can't afford a CFO. Yes, I did check on that. A CFO in California would cost someone 150,000 a year. But fractional CFO is fractional time and a fractional salary and more. And the CFO is a function that we know, but the fractional CFO is actually a trend. And this trend didn't really start just now after the pandemic. It's actually a trend started in 2008. So back in 2008, when we went through the recession, and there's a lot of CFO got laid off, but there's also a gig economy starting up. So a lot of them are start taking part-time job for the startups and making fractional amount of income, but then bring the gig economy, bring those software company up so they become a full-time CFO. So that is where that started. Now, after this last 18 months COVID run, we know that we're so comfortable with webinars anymore. You see me here every week, right? And we're so comfortable at meeting all of our team members on Zoom anymore. And what's wrong with having a remote virtual CFO to help you and when you need it, right? And so in the past, and I want to mention to you that Community CPA, we actually provide fractional CFO services, but we never named it that way because it wasn't a concept that enlightening us. And we actually before in 2008 and 2009, I don't think I ever heard of it. Back in 2008, Community CPA was fractional piece of today. So, it did grow for the last 20, now we are in, yeah, for the last 10 some years it's grow a lot harder. But the firm actually started in 1998. So by 2008, I actually already ran the firm for 10 years. But I am not really, in that regard, I know I'm really slow because for someone to run a company for 20 some years, they're probably million times bigger than I am. But having said that, in the first 10 years and the 15 years, it was really the learning curve for me personally, trying to understand. I'm not really, I don't have a business background. My dad is a professor. My mom was a doctor before she married to my dad, then become engineer. So working for a large company. So my life in the younger years is all about working what people tell you to do. So I didn't quite understand the entrepreneurship. So it's taking me that long to really move the firm to today. But I totally understand this need for fractional CFO. I just don't have a name for it. So what we did is we call that business consultation. So people would come to us and saying that, oh, I want to apply for SBA loan and I need a business plan, I need a projection, marketing plan. So what we do in our firm is I actually personally would write that. I would go in to understand what the business they are doing, then I will start projecting that. Actually, most recently, I did three of those kind of business plan for SBA, large, huge SBA loans. And so we were providing fractional CFO services, but we didn't call it CFO service. So a lot of CPA firms are in that kind of shoes. But I will tell you that the benefit of knowing that is fractional CFO services, it will give a wraparound concept, and you understand that it is a higher level service than bookkeepers, tax preparers. It is a level of service that the business owner must have in order to scale. So with that said, and you can go back to your CPA firm if you have someone who you work with really well, and always give you the advice you ask, but just never ever build you because they didn't really have that concept and they never really put the price together. And for us, and we actually put the price together as a project. So it is not fractional CFO service, but we call that business plan write up, and we call that tax structure planning, things like that. But it's literally the content of fractional CFO. So what you do is you want to tap into that talent. And if your CPA is so great and they don't want to charge you, but they give you fractional CFO services, take it. Take it and don't let them watch my videos so that they can continue to provide you with the service, but not needing to charge you. And I say that because there's period of time in my life, and I supply services to people I do not charge just because I don't have the confidence to charge, and I was still learning. But today I will tell you that I consider myself one of the best tax strategists, and especially for small, medium-sized business. If your revenue didn't go up to 100 million, and you are right here, and I am very good with that, and I understand business to the T. I don't know why I do, just because I have 12,000 clients. That helps, right? So I see all kind of things coming through that give me the tool, give me the skills to be your fractional CFO if you like to hire me. And hiring a fractional CFO, it is really about getting a customized professional service for your business with highly qualified individual. So I hope that you find that person. Of course, I couldn't really serve all of the people out there wanting me to be fractional CFO. So I do select my core competency. But in your industry, you'll find someone who can be that for you. Here is the qualification I want to give you. They should have a degree. And I don't care how out there people tell you that this guy made a million, didn't have any degree, and so they're putting down education as if it is not needed. I don't buy that. And there is no one works in our firm without a degree. So it's really important to have a degree. And for your CFO, they must have a master's degree or bachelor degree in finance or accounting related. They must have experience as a CFO for a company. Okay, I myself, I have been CFO for Iowa State University. They have an extension program. So I was the CFO there for 6 years for a nonprofit organization. Then I also have done in the same capacity as a vice president of controllers for Wells Fargo Financial Inc. So there I have that experience. So that is important. Without those experience, you can't really You can't really map out what other people want to be. So you also want to make sure that your CFO that you hire has a good computer skills. I am talking about not just Excel, everything, because the dilemma is the technology is so advanced. If you hire someone with a good brain but just doesn't type or doesn't even know how to use Google Drive and it cannot download, files with you, and that's gonna take a lot more of your time. As a business owner, you want things to be ready right away. So that is important qualification to have. And then I also summarized 5 most common reasons why company hire the fractional CFO. And let me show you what they are. So number one, actually I put it as number 5, but actually the number one is budget limitation to hire a full-time. So obviously in California is 150K and in Iowa is 125K. So that's a lot of salary to pay. So if you don't really have that much of sales, you don't really need a full-time CFO. So you want to do it partial. And the budget limitation is number one. Then the other thing is goals. When you are at the stage where you start setting goals, and you know that your goal, what you said, need to have number backed up. You really need to know the goals. And I also learned from Pinnacles. And there's one time, and my mentor was asking me, oh, what is your goals for the sales? So I blurt up a number, okay, 10 million. So then from that 10 million, what you do, you need to divide that into your average sales for each client. Then you figure out how many clients you need. Now you look at your today's client, you know the gap you have. Oh, I short of 50,000 clients. Then you do the 50,000 client marketing. So this is where that goal, whatever goal you have in business, that goal, it will become the reason you hire a fractional CFO. And then the second reason is when you go through high growth or downsize. Both are volatile. And at this time, business owners, I will tell you that how strong can you be? And tell me you have the moment that you almost want to walk away from your business. Of course, of course. But those are the moments we need to have that CFO support because they are logical. Those CFOs would come sitting here and tell you what to do. And I'll tell you a story yesterday. I have a client came to see me, and they have a trucking company. And so during the pandemic, I haven't seen them since March of last year. And I haven't really wrapped up their 2020 tax return. So I didn't, he just showed up and I was a little bit caught off guard and I didn't really look at the taxes. So she came in, she wants to close her company. So she said to me that I want to close my company for a while, and I just come to the city and I figured I'd just come to see you. And my husband don't even want to come because he doesn't want to talk about it. And we want to close the company. So I sit down with her, look at her number and talked about the reasons why she felt that way. And by the time she left, we actually applied the EIDL loan online to get that done. And we planned what to do for the rest of the year. And the plan is to keep it going, keep it open. We can't afford to have those trucks sitting, not doing anything. So you see, the CFO is the one that would give you that guidance, will know that filing bankruptcy is not a way to go. And do you know how long it takes a bankruptcy to be done? It will take about 6 to 9 months. 6 to 9 months filing bankruptcy, your life is on hold. You can't do anything. You feel like you are in depression the whole time. No, it's not a good deal. It's not a good deal. And you need to fight every chance you have and utilize what you have. And the government has help and we need to go for government. So I actually did the application. I told her that, in a week time, if you don't hear anything, go to federal building and go talk to the officers over there. So that's what she's going to do. So that gives you an idea. And I know, of course, special project deserves fractional CFO. And also to keep your staff and your partners accountable. All right. So those are common reasons why people hire fractional CFO. I know you want to know this, how much to pay. You want to know that on the market, if you look for a CFO, fractional CFO, what is your charge? Here you go. Its hourly rate goes from 175 to 350. And I look at the most recent data, they're talking about 300. So it's in the range. So if your sales is less than 1.5 million, and your fractional CFO is 10 to 20 hours a month. If your sales is less than 5 million, your fractional CFO is 15 to 40 hours a month. So it is just about a week. Okay. 40 hours is a week, right? So that's where that is. So I also put in the amount right there because I was using $175 to do that. And in our firm, because of its online service, we actually, before when we do it in person, I actually did charge 350. But now because it's online, it's more efficient. We're actually going for the CFO kind of service. We're going for 175. And especially for me, if I meet people online, and I would charge that amount for getting the CFO type of work done. So 5 million to 10 million sales, and you have 40 hours to 80 hours a month. And then of course, if you go above 10 million, why are you listening to this webinar? You should be getting a full-time CFO. All right. So my last slides for today, I was going to give some real life example, but I noticed that our time is already up. So I will just pick one from here. I already kind of talked about the SBA loan application and the shopping mall projection that you can imagine what we do. We project the shopping mall, and the supermarket planning, we did that as well. All of these ones I'm talking about here, and they all got funded. So we have a really high success rate for that. And one interesting one I will tell you, I have a client, this is a couple of years ago, and she runs a restaurant, and I always said that her restaurant, this particular location, it doesn't make money because the payroll cost looks really high. So I asked her, well, did you overhire too many people for this restaurant? She goes, no, everybody is so busy. We're so busy. So I said to her that, well, is it possible that your kitchen is not efficient? So how many people in the kitchen, and what's your delivery looks like? And she was looking at me and said that, I can't believe you said that, because our kitchen is so not right. It's really big. The cooking place is way in the back, and she need 1.5 person to run fast boys from the kitchen out, deliver, and back in. That need to be 1.5 person. So that's why that restaurant makes less money, because the structure, the layout is not right. So this is what CFO does for you. So when you hire the right person, and they will have this insight for you that you did not see, or you see it, but you don't know how serious that is. So I calculated 1.5 for her, and I came up with all the cost and all the Social Security, Medicare, and workers' comp, all the costs that related to that 1.5 employee, and she would actually save $35,000 a year for that position, for that 1.5. And this will be put on the bottom of the profit. Of course, she's going to make money, right? So there goes. So I told her that 35,000 is a good deal, because you're going to use that money, renovate that kitchen, and make it efficient. You will save that 35,000 in the future, but the first year you're going to put it in to operation. So with that, I want to wrap up today's talk, and you can always email Catherine at communitycpa.com, and to give us the topic you like to hear. And our number is right here. I am right here, and I'm so proud of you to come in to see me at the webinar. I hope that this is helpful. I'll talk to you again. Bye-bye.